Welcome friends. In this edition of the live virtual classes for the paper Advanced Financial Management Paper 2 Final Level, ICAI Ashish Gupta welcomes you all. Now student, in today's session, we shall start with the topic of the foreign exchange exposure and risk management. And today we have with us our renowned faculty, CA Amit Bhatia, and he will discuss with you this topic. And since this topic is very important from examination point of view as well as practical point of view, so my request to you, student, please pay attention what our faculty is saying. And if you have any doubt, you are free to ask during the session as well as after the session. So, and there is assignment for the same class also, though there is a delay in the getting it uploaded, but now it has been uploaded. But initially, Amit sir will start discussion about the basics of the foreign exchange. So assignment will be required only after some time. So, or moreover, if any questions will be, some questions will be discussed in the class. And if any question will be left, they will be continued in the next class. So over to you, Amit sir. Now it's your, please start the session. Thank you very much.
Thank you, Ashish sir. Good morning, everyone. I am CA Amit Bhatia. Let me start with sharing the screen so that we can initiate the topic. Are you all able to see my screen? All right. So our topic is Forex exposure and risk management. So we are essentially going to focus over here on, to start with, Forex exposure and risk management, right? Now, before I start with Forex exposure and risk management, let us first of all establish what is the meaning of Forex. So we will take care of the exposure and risk management part slightly subsequently, right? So first and foremost, what is Forex? Often also being denoted as FX, right? So what do you mean by Forex? Now Forex, it is nothing but foreign exchange, right? Now, normally you have learnt about exchange even in business law paper as well, where we are generally talking about exchange of goods and services by payment of consideration, etc. Here also you have an exchange. However, the exchange is going to be essentially of foreign currencies, right? Foreign currency. So why would I need to essentially have foreign currency, or why do I need to deal in foreign currency? As you are aware, in today's time, none of the economies are self-sufficient. We are dependent, right? So because of this interdependence of various economies, what happens? We need to do global trade, right? So there are various reasons now which arises, like for example, global trade. What could be the other reasons? As you know, in case of India, we have a difficult balance of payments position. The reason being, the country is predominantly a huge importer, right? So we import oil. You might have seen that on news as well. We import a lot of oil. And as a result of that, with most of the countries around the world, we have a negative balance of payments position because we import too much of oil from the Middle East countries. When it comes to other countries, either we are importing goods or services. Now, how do you essentially set off? Because to start with, I'm not going to obviously be able to sell off all the goods and wares which are required by the world at large. Besides, in economics, we have learned that one of the disadvantages that we had traditionally was we were basically selling raw materials, right? What we were selling was raw materials, while what we were importing were finished goods. So we are selling essentially raw materials, importing finished goods. Now that essentially gives rise to a balance of payments negative position. So I would need more and more international currency to deal with it, right? So say for example, if I have to deal with US, I want to essentially buy some goods or services from US. Then in that case, I have to make, so I am in India and I am importing something from US. So US is going to give me some goods or services. What do I need to pay them? I need to pay them in US dollars. Now my currency is INR. So how do I convert this INR into USD? So that is where you will have exchange coming into place, right? Because unless and until I convert my home currency, which is INR, into an international currency or a foreign currency, that is US dollar, I will not be able to make payment to my clients, right? So that is what establishes basically the international need for foreign currency. Now, to start with, what are the different types of transactions which happen across the border? What are the different types of transactions which happen across the border? Yes. So let us take the types of transactions which happen across the border. Types of transactions. And since, as I said, it is across the border, it involves foreign currency. Am I right? Yes. So what are the different types of transactions? First, obviously, we just spoke about it, trade, right? What else could be there? Do we borrow money from abroad? Yes, we have an option. So you can either borrow in INR, which is my local currency, or I can borrow in foreign currency. Now, what is the difference between that? You might have heard about Reliance Industries had paid off all their local loans and then they went and borrowed money in foreign currency abroad. The reason being, here the rate of interest was a lot higher in India. On the other hand, in US dollar at that time, we are talking about good 4 years, 5 years back, US Fed rate was almost zero, which basically meant that corporates could actually borrow money at very concessional rate of almost 1 to 2% per annum. Now that is a huge difference, right? In India, even if you are a huge conglomerate like Reliance, you are still paying at least on an average cost of anywhere between 8 to 10%. While in US, we are paying only 1 or 2%. So obviously, it makes sense to go and borrow funds from that particular economy. So they took money from in US dollar terms, right? Now that is borrowing. There is also another aspect which is there, as you are aware, in the same company, for example, Reliance. Reliance was also issuing some of their shares to an international company, right? Like, for example, Aramco was trying to invest almost $20 billion into Reliance Industries. So that would have been FDI. Am I right? That would have been FDI into India. Now, similarly, if I can have FDI into India, there are also opportunities where FDIs are made abroad, right? So it is either into India or abroad. Do we know any examples of abroad? The answer is yes. Tata acquired Chorus. That was FDI, right? They essentially bought it for over $1 billion, which was investment by an Indian company abroad. So again, they wanted to buy Chorus, and for that they needed foreign currency. What are the other reasons for which you would need to involve foreign currency? Yes, so we have FDI, we have borrowings. Now we could also have some foreign companies setting up their plants in India, right? Setting up plant in India. For example, Volkswagen has got a plant in India where they manufacture cars. MG Hector has already set up their plant. Ford Motors has. So when you are setting up a plant or setting up a branch in India, you would need to essentially involve foreign currency over here, right? Again, so that requires you to have foreign currency transactions happening. Now, generally, you will also find that I have to do transactions, say, for example, in, let's say, I'm buying something from China, right? So, buying, say, for example, from China. So, for that, I would need Chinese yuan. Now, generally, Indian rupee, as you would have directly seen in various, uh, you know, uh, television channels, news channels, etc. Whenever you see Indian rupee exchange for any other foreign currency, you will find those two or three currencies against which normal quotations are directly available. That is dollar, pound, etc., but not Chinese yuan. So if I have to essentially buy something from China, I need to pay in Chinese yuan, which means I need to give Indian rupee by Chinese yuan and settle the payment. For this particular purpose, now how do I buy this? So I can't do that directly. I will need to do that indirectly. But nonetheless, again, I would here need to do transaction in probably not one, right? But I will need to have this particular conversion done indirectly. What is that? I'm going to touch upon that also subsequently, right? How do you essentially convert it indirectly? But these are the predominantly the various purposes, right? So you have trade, you have borrowings, you have FDI, or you can say also FPI, right? Foreign portfolio investments or foreign direct investment. You have setting up of plant in India. Now, you also have, say, for example, purpose of you are traveling abroad. So you are traveling abroad. You will again need traveling abroad. So again, for that, you will need foreign currency, right? Now, another important element is every time for all these purposes, borrowing, traveling abroad, trade, buying from some other country where direct quotations are not available, setting up plant, I need foreign currency. If I already know in advance that I would need foreign currency maybe 1 or 2 months down the line, but I do not know whether foreign exchange currency rate, that is, exchange rate, will remain stable or not. Then in that case, I have a risk, right? And how do you cover that risk or exposure? That exposure is managed through something known as hedging, right? Hedging. Now, these are the total areas that we are going to cover in this particular module, because we are essentially going to cover about what is hedging, which is risk management, basically part of risk management, right? You need foreign currency for what transactions? These are the different types of transactions for which you require foreign currency. Controlling the exposure. So what is the, first of all, I need to know what is the exposure, right? So we will do computation of those exposures, how the different currencies get quoted, what is the way of quoting it across, right? Having said that, this is one of the topics which is very important for the examination point of view, right? Because Forex exposure and risk management predominantly will find a lot of the questions are there in the examination. So directly or indirectly, this particular module has a lot of weightage in the examination, because based on this, you will also have the derivatives module coming in, right? Where you are essentially trying to take forwards, futures, and other transactions based on what is exchange rates and to cover your positions, right? So in that perspective, this entire module becomes very, very important and relevant for us, right? So now let us look at, first of all, a simple example. Foreign exchange is something that we actually have been doing because it's based on the concept of exchange. Exchange is something that we have learned even earlier. That is not new to us. So how do I go about establishing that? So let us take a very simple example. Okay. Let us take a very simple example. So let's say I want to buy shares of a US company. So say for example, we take the example of, these days Elon Musk is in a lot of news. So let us take the example of Tesla, right? Let's say the date is 1st January 2023. Okay. On 1st January 2023, you are essentially in the market, you are told that $1 is equal to rupees 50. Okay. And on this particular day, you are investing 1 crore rupees. You are investing 1 crore rupees on 1/1/2023 when the exchange rate is $1 is equal to rupees 50 and price of the Tesla shares. P0 is price, right? Price of the Tesla shares is, say for example, that particular day it is going on at, let's say we take it as $50. Okay. I repeat once again, we are buying shares of US company Tesla on 1st January 2023. The total amount of investment which I have, this is my investment or capital which I am investing to buy the shares, that is rupees 1 crore. The prevailing exchange rate as on 1/1/2023 is $1 is rupees 50, and the price of Tesla shares, say for example, as on this date is $50 per share, right? $50 per share, right? Now, say 1 year down the line on 1/1/24. Okay. So price on 1/1/2024 is, say for example, $60 per share. So year down the line, price of the share is $60 per share. As on this date, as on 1/1/2024, price of $1 has become, say for example, rupees 52.50. I repeat once again, on 1/1/2024, we have price of Tesla shares has become $60 per share, and the exchange rate is $1 is equal to rupees 52.50. Now you have to calculate over here what is the return earned. Okay, return earned on Tesla shares in dollar terms and on Tesla shares in rupee terms. So very simple. This is something which we have done earlier also in your financial management also, right? And say, for example, I give you additional information over here further that D1, that is dividend during the year, right? So let's say dividend which was paid off as on 1/1/2024 was, say, for example, $3 per share, right? $3 per share. So how do I calculate return now? How do we calculate returns? What is the formula of calculating returns? We generally say it is P1. What is P1? Ending value, right? Ending value. P1 minus P0. What is P0? This was the beginning value, right? Plus, did you earn any dividend? Yes, which was dividend. Whole upon what was your beginning value, original investment. So when I'm talking from dollar terms, in dollar terms, right, I'm now trying to find percentage return in dollar terms. So in dollar terms, I earned how much? $60 is my closing price or ending value minus beginning value, which I invested was 50 plus 3 upon 50, right? And since I want return, I will say into 100. Now, what is the total return coming to? 13
20.
upon 50 into 100. That comes to 26%. Am I right? 26%. This is in dollar terms. Is my return in rupee terms also 26%? Yes. Is my return in dollar terms also 26%?
No, sir.
No. How much will be my return in dollar terms? Any ideas? Can anybody try that? Would you like to try that? How much will be my return on dollar terms? Yes?
20 lakhs appreciation plus dividend rupees 3 into 2 lakhs dollars divided by 1 crore investment.
Very good. So let's start. So यहाँ पे हम रूपी टर्म्स में देखते हैं. So when I invested, what was my original investment? Original investment was rupee 1 CR. Am I right? So when I converted this 1 CR, how many shares would I have got at that time? Number of shares कितने मिले होंगे मुझे? Any ideas? Yes. Number of shares मुझे कितने मिले होंगे?
2 lakh divided by 50 I will divided by 15.
1 crore. 1 crore divide by 50. So that gives me amount in USD. Am I right?
Yes, sir.
Now again I will have to divide that amount with 50. मुझे कितना USD मिलेगा? 2 lakhs. Sorry. 2 lakh USD मिला मुझे, right? This is my dollars upon 50. So I will get how many shares now? 4,000. Am I right? Yes. Am I right?
Sir.
So I get 4,000 shares, right? This is my original investment. ठीक है. Now during the year I got some dividend also. So what is the ending value for me now? Ending value कितना होगा मेरा? I have 4,000 shares into what is the price at the end? Price at the end P1 कितना है आपका? Ending value डॉलर टर्म्स में $60 है ना? Am I right? हेलो, $60 plus $3 आपको डिविडेंड मिला? Yes or no?
Yes, sir.
तो टोटल डॉलर टर्म्स में 4,000 into 63 वो कितना होता है अमाउंट? कोई कैलकुलेट कर सकता है प्लीज? आई थिंक दिस शुड बी
2,52,000.
2 lakhs
52,000.
2,000. ये हुआ डॉलर्स. मुझे तो INR में चाहिए. So on 1/1/2024, remember this is ending value 1/1/2024. So 1/1/2024 then what was the exchange rate? What was the exchange rate over here? 52.50. Am I right?
Yes, sir.
52.50. So what will this value turn into? Can you please give me the number? What are we doing? We are
So
calculating return
1
in
crore,
rupee.
1 crore 32 lakhs 30,000.
1 crore 32 lakhs
30,000.
30,000. So what is my return on investment in INR terms? Yes. So what is the return? Yes, yes, बताओ. Ending value minus beginning value
Value.
upon beginning value. Am I right?
Yes, sir.
कुछ गलती कर रहा हो तो बताना भाई. हाँ, 1 crore 32 lakh 30,000 minus, so it is 1.323 minus 1 upon 1, यानी कि 32.33% आया.
32.3. Yes.
So this becomes so I have 32.30% as my answer. Now, when you're earning 26% in dollar terms, how come you're earning 6.30% more? What is the
Depreciation in rupee value, sir.
exactly? So there are two elements to it, right? What are those two elements? One is stock return. So you have stock return. Stock return कितना है आपका? 26%. Am I right? Stock return is currency depreciation का रिटर्न कितना है? बोलिए. करेंसी डेप्रिसिएशन का रिटर्न कितना है?
So are you asking depreciation rate?
करेंसी में कितना डेप्रिसिएशन हुआ है? 50 became 52.50. Am I right?
%5.
So we have करेंसी डेप्रिसिएशन की वजह से मुझे कितना रिटर्न मिल रहा है? आई एम गेटिंग 52.50 minus 50, right? Divide by
50.
Divide by 50.
5%.
Divide by 50 into 100. Am I right? So I get 5%. This is 5%. So I get 5%. अब अगर मैं टोटल करता हूं ये दोनों का तो मुझे रिटर्न कितना आ रहा है? 26% plus 5%.
31.
Let me remove this 100. I will make this as percentage over here in the format. ठीक है. So अब अगर मैं इन दोनों को ऐड करता हूं, इन दोनों को 26 plus 5 31% रहता है, लेकिन मेरा रिटर्न तो 32.30% आया. So there is a difference now. There is a difference of 1.30%. 32.30% minus 31%. ये difference क्यों आया? कोई बता सकता है मुझे? Why am I getting 1.30% extra?
Dividend rate, sir.
Dividend rate.
नहीं, वो डिविडेंड तो इसमें आ गया ना बेटा. 26% हमने यहाँ पे $3 ऑलरेडी ऐड किया है. कैन यू सी दिस? मेरा कर्सर आपको दिख रहा है? ऑन द राइट साइड 60 minus 50 plus 3 upon 50. वहां पे हमने 26% जब भी कैलकुलेट किया तो उसमें 3 तो ऑलरेडी आ गया ना. सो डॉलर इज ऑलरेडी इनकॉर्पोरेटेड इन दैट. आई मीन सॉरी, डिविडेंड. सो दैट इज 26%. करेंसी डिप्रिसिएशन की वजह से जो मुझे फायदा हुआ वो 5% हुआ. तो ये 1.30% एक्स्ट्रा किसकी वजह से आया है? Yes, any ideas? बताऊं मैं? Yes.
Change in price.
मेरा रिटर्न जो है स्टॉक रिटर्न की वजह से मुझे फर्क आया 26%। करेंसी डेप्रिसिएशन की वजह से मुझे फायदा हुआ 5%, क्योंकि उस दरमियान विद इन दिस 1 year because Indian rupee depreciated, so I got 5% more.
The
This
interest
5%
rate,
did you receive only on 1 crore or did you receive on entire? So original मेरा कितना इन्वेस्टमेंट था यहाँ पे देखिए. Are you able to see this? Are you able to see my cursor, please? Original investment was $2 lakh. Are you with me?
Yes, sir.
So did I receive this 2.5% extra only on $2 lakh or entire $2,52,000?
252.
252. So it is basically 5% off, not just on 100, but I received this 5% benefit even on the 26% return. Do you agree with me?
Yes, sir.
Yes, sir.
समझ में आ रहा है? This is called factor on factor, right? So you have essentially mathematically आप बोलते हो ना factor on factor. Factor on factor मतलब क्या हुआ? Let me complete this. Say for example, I say
5% of 26%.
5% into
26% का.
26%. समझ में आ रहा है? तो उसकी वजह से मुझे 1.30% आया ना? समझ में आ रहा है ये?
Yes, sir.
So now my return is 32.30%. ठीक है? So in Indian terms, basically when I am looking at it as an investor, I got stock return. I even got the benefit of the currency depreciation in INR terms. उसका भी benefit मिला. And then I also got the benefit of factor on factor, right? So this is nothing but depreciation benefit on stock return, right? Depreciation benefit on stock return. इसको normally mathematical speaking में आप क्या कहते हैं? इसको factor on factor return बोलते हैं, right? Are you all with me? समझ में आ रहा है? ठीक है? Hello?
Yes.
Yes, sir. Yes, sir.
Okay. So far what are the concepts that we have established? ये इसमें हमने अभी तक कोई नई चीज नहीं की है. These are the things which are available, which you have been calculating. So because Forex, foreign exchange, is predominantly exchange, which you have been doing year and year, right? So even if you may be 18 years or 20-year-old, you have already done exchange. Now the only difference is you are not exchanging any goods or services, but you are exchanging essentially in foreign currency terms. तो यहाँ पे हमने कौन से terms already learn किए हैं, right? So now we are going to focus on which are the terms which we have learned. But before we go to do that, क्योंकि हमने ये already एक process किया है, right? This is the process which we have learned about investment in FDI being done by Indian company or Indian individual abroad. So इसमें मैंने क्या क्या किया for calculating my return? What are the steps? इसको मैं अगर process करने जाऊँ तो मुझे क्या
Amit
होगा?
ji,
जी जी
Amit
सर.
ji, there are some many students are non-Hindi speaking students. So just major portion your lecture should be in English.
All right, sir. Fine.
Okay.
No
So
worries.
because non-Hindi people students are also watching this lecture. Okay.
Fair
फिर
enough, sir.
they may not understand. Okay, sir.
All right, sir. All right. I'll do that. All right. So now what we have done over here is currently we purchased some shares of Tesla. At the beginning, I invested 1 crore rupees. At the end, what I got was 1 crore 32 lakhs 30,000 rupees as a return, right? So we calculated, we computed two things over here. There were two questions which were required to be answered. What is my return on Tesla in dollar terms? What is my return? I'm sorry?
You're now connected to both.
Hello? Hello? Shall I continue?
please continue. Please.
Yeah. So return earned on Tesla in dollar terms and return earned on Tesla in rupee terms. Right? Now here we computed the returns respectively in rupee terms. So in dollar terms, first of all, I got 26%. This is something, this particular formula is already being computed by you, right? You already know that this is something which you have learned earlier also in growth model, right? How to compute your return. So this is nothing but your ending value minus beginning value plus dividend which you have earned during the period upon my original investment, which is P0. So I got 26% in dollar terms. In rupee terms, we converted all the values. So original investment was 1 crore. That 1 crore when invested at the beginning, remember at the beginning of the year, the value was $1 is equal to rupees 50. So if I buy foreign currency USD, what I would have got is 1 crore divided by 50. So I get $2 lakh. And since Tesla share was also of $50 per share, I would have received 4,000 shares at the beginning of the year. Right? Now, during the year, I was also paid dividend, right? So we are told after 1 year, at the end of 1 year, what is the price of the share? $60 per share. Exchange rate at that particular point was 52.50, and dividend during the period was $3 per share, right? So what now at the end of the year, when I want to essentially find the ending value or terminal value of my investment, I get how much? 4,000 shares into $60, which is the price, plus $3, which I received as dividend. So I received total of 2 crore 52 lakhs, 4,000 shares into 60 plus 3, $63 per share. So I get 2 crore 52 lakh shares, 2,52,000 rupees, dollars. And I convert that into rupee terms by converting them at the exchange rate prevailing as on 1/1/2024, which is 52.50, right? So I get 1 crore 32 lakh 30,000. So my return in rupee terms is 32.30. How is that? Because I get that original investment is 1 crore, ending value is 1 crore 32 lakh 30,000. So how do I calculate my return? Ending value minus beginning value upon beginning value into 100. So that is nothing but 1.323 crore minus 1 upon 1. So I get 32.30%. What we further discussed was that since my stock return is 26%, my currency depreciation, what has been the difference in that? Because value has depreciated predominantly by 5%, right? It is 52.5 minus 50 upon 50. So it has depreciated by 5%. So total return, which I should have been getting is 26 and 5, 31%. But what I got was 32.3%. So from where did this 1.3% difference arise? Because you got the benefit of currency depreciation, not only on your original investment of $200,000, but also on the return which you had earned, right? So you had originally put in $200,000, and now what you are getting is 252. So on this $52,000 also you got this incremental 2.50 rupees per dollar extra, right? So that is known as depreciation benefit earned on stock return, also known as factor on factor return, right? So how do you compute that? You essentially say it is 26% into 5%, so you get 1.30. Now that is what is giving you the total INR terms return of 32.30%. So my return basically has 3 components. When I talk about return in INR terms, I get 3 components of returns. One is stock return. Second is currency depreciation in this case, right? Because INR has depreciated. And third one is depreciation benefit earned on stock return, which is factor on factor return. Okay. Are you all with me? Now, in the entire process, what are the steps that I followed? Let us convert this entire thing into simple process for us. So, what did we do to start with? First of all, I had 1 crore rupees, so I did conversion of original investment into foreign currency, which is your dollar. Am I right?
Yes,
What was
sir.
my second step? What was the second step we did? Once it was converted into dollars, then what did we do?
We calculated the difference,
We calculated the difference,
and dividend we also calculated.
but you will have to first of all invest, na beta? You need
Yes,
to
sir.
invest the money in shares, right?
$1.
So invested in stock, which was over here, Tesla, right? And how many shares did you get over here? We got
4,000.
number of shares is equal to original investment divided by T0. That was the price prevailing at the beginning, right? Am I right?
Yes, sir.
Okay. So I got number of shares. Now I need to calculate what is the value of holding at the end of the year. So for calculating value of holding, this is what we did, right? What we did do first, we had 1 crore converted to 4,000 shares. This is where my step number 1 and 2 comes in, right? First of all, I converted 1 lakh into 2 lakh dollars. That is step 1. Then I purchased shares. That is step 2. So I got 4,000 shares. Now step 3 is I need to convert and calculate what is the ending value in dollar terms, first of all, again. Because right now my investment is in dollar terms, right? So I calculate the value of holding at the end of the year. Then fourth step, conversion of ending value into INR. Am I right? And then I calculate return on investment in rupee terms. Let's check, are these the 4 steps which we did? So how did we calculate? First of all, conversion of original investment into, what was my original investment? I am again redoing this entire thing so that the concepts are very, very ingrained into your minds, right? So please be with the concept. Original investment was 1 crore. We converted that into USD. How did I get that? 1 crore divided by 50. Are you with me? Everyone, are you with me, please?
Yes, sir.
Yes, sir.
All right. Now, next, I invested that in the shares. So, how many shares did I get? How many shares did I get over here? 200,000 or 2 lakhs divided by, what is the price of the share?
50.
$50 per share. So, I got 4,000 shares. So far, so good, right? Now, I need to calculate value of holding at the end of the year. So, how will I get value of holding at the end of the year? 4,000 multiplied by, what was the value at the end? 60
60.
plus
Plus
dividend, which is
3
3,
rupees dividend.
right? I am also going to add over here formula text so that it becomes easier for you to remember, right? What is this? 2 lakhs divided by 50, right? Then we again add over here. How did I get this amount? So that is nothing but 2 lakhs divided by 50. 4,000 shares, and Then again, now I have, how do I get 2,52,000? So it is 4,000 into 60 plus 3. Now let us convert this into INR terms. So 2,52,000 into, yes, what is the rate now? What is the rate as on the ending value? INR का rate क्या था? 52.50,
52.50.
right? So that is 1 crore 32,30,000. Right? And now I want what is the return on investment in rupee terms. Now you can compare these two easily, right? So I can say it is ending value minus beginning value upon beginning value, right? I'm getting this in decimal. I convert this into percentage. So I get 32.30%. So whatever we did over here as an example, right, which we understand as a concept, now the same thing I have formalized it as steps. Yes? Is this clear with this example? Now there are certain questions which I would like to raise over here, right? Which are the two countries between which the foreign currency transaction happened? Yes. Transaction happened between which two countries? Yes.
India and US.
India and US. Okay. So India went between which two? Let me put it the other way around. Which two countries ke bajaye, let me make it as which two currencies. Okay. Currencies. So it is India and US. Right? So if I say this is INR and this is USD, US dollar. Now, between these two currencies, which one is considered as home currency and which one would you consider as foreign currency?
INR is home currency, USD is foreign.
Home currency is INR. And why do you say this is home currency, Vita?
The
Yes, dear?
investor is converting Indian currency to US currency. So he's using INR
Because,
to
yes, exactly. Because that is your own currency through which you bought a commodity, right? And the commodity over here for you was US currency. So this is foreign currency. So you have home currency and you have foreign currency. Okay? Are you all with me?
Yes, sir.
All right. Now, codes of currency. What are the codes of currency being given as? It was told to us that it is $1 is equal to rupees
Direct.
50. $1 is equal to rupees 52.50 at different dates, right? So there are two types of codes, right? Direct and indirect codes. What do you mean by direct codes?
Value of foreign currency in terms of our home currency.
Very good. So that's the way to define it. In simple terms, see, I am an Indian guy. So when I walk across the street, if I'm going to buy something, whether it be potato, onions, etc., whatever it is, I'm always going to pay it in INR terms, right? In my local currency terms. So just like I'm buying any other commodity, whether it be potato, whether it be onion, whether it be bread, I'm always paying in INR terms. And similarly, just like that, for me, foreign currency is not my currency, right? Foreign currency is also just another commodity for me. So when I am expressing the price of that currency in my currency terms, in my home currency, it's called direct quote, right? Then in that case, what do you mean by indirect quote? What do you mean by direct quote and what do you mean by indirect quote then? Yes. So here in direct
What?
quote, just 1 minute, dear. I will try to simplify it over here. Are we all comfortable with this concept of numerator upon denominator? In mathematics, you have numerator upon denominator,
Yes, sir.
Yes, sir.
right? So when the currency was expressed over here as equal to 50 rupees per dollar, was it 50 upon 1? Does that mean it was 50 upon 1? Yes or no?
So
50 rupee, because it was $1 is equal to rupees 50, am I right? Rupees 50 per USD, am I right?
yes, sir.
Rupees 50 per USD. So what is numerator? Rupees or USD?
Rupees.
Rupees. So here rupee is known as your reference currency, also known as pricing currency. Are you with me? Yes.
Yes, sir.
Now USD in that case is known as base currency. Are you with me?
Yes, sir.
Now, in this case, currently, rupee also happens to be my home currency. So I can also write over here, rupee is my reference currency or pricing currency, also home currency. Are you with me? It's the same thing, but being referred to as with 3 different names. Does that change the concept? The answer is no. As long as I am buying something, remember my currency is INR, Indian rupee. So for me, USD is just like any other commodity. So think of it just like any other commodity. इसका भाव क्या है? What is the price for this particular thing? They say, okay, this is worth 50, 60, whatever. So if say, for example, a lot of the time students get confused because both the currencies are mentioned, right? But if you actually simplify it by replacing that currency with, say, for example, a particular commodity, any commodity, your life becomes a lot simpler because then you know price of one potato is, say, for example, 50. Price of one potato now has increased, it has become 52.5. Your concept becomes a lot more easier for you to understand, right? Getting it, at least to learn about it in your domestic currency perspective. So here, my reference currency or pricing currency or home currency, which is also sometimes also known as domestic currency, right? These are the different terms being used interchangeably, or domestic currency. Your USD is base currency, also it is foreign currency. Okay. Now, in the case of indirect quotes, I would essentially be mentioning this same thing again. However, now the role will be reversed, right? Instead of mentioning rupees 50 per USD, I'm going to mention over here how much dollar can I buy in a rupee. So in other words, now the denominator is going to be dollars per rupee. Are you with me? So you have USD, say 0.02 per rupee. Are you with me? Yes. Now my question to you over here is, which one is reference currency over here? Which one is the reference currency over here?
USD,
Yes.
sir.
Which is the reference currency?
US
USD, sir.
foreign currency.
USD. Yes. Numerator is known as reference currency, right? So reference currency is always the one which is in numerator because the denominator is always known as base currency. So if I'm going to say it is USD 2 cents per rupee, rupee is the base currency in that case and USD is the reference currency or also known as pricing currency. Is that clear? Are you with me? Now, here there is also one another concept which is there. Quoting of currency, you might have learned if you have already seen the module, or if you have not seen the module, there is also another term called American term and European term. Right? American term or European term. So what is the difference between American term and European term? Anybody? Any idea?
It's generally used in call and put options, sir. So, American term, you insert it within a set period, European at the end of a set.
Yes. So when we generally say quotes of currency, you are very much right. We also use the term American term or European term, right? So what we are mentioning over here, for example, when I am expressing my currency over here in terms of rupees 50 per USD, direct method, this is known as basically quoting as per European term, which basically means that USD is the base currency for us, right? The American term of explaining or expressing it is known as indirect method because you're always mentioning US dollar in the numerator in that case. Are you with me?
Yes, sir.
Right? So European term is always, American term is about always dollar being in the denominator. So you're basically talking about how much dollars you will get per unit of foreign currency, and European term is about how much foreign currency you will have per US dollar. So here the difference is that now you can see over here European term is nothing but again direct quote, American term is nothing but indirect quote. Majority of the countries across the globe, they follow European term of expressing their currencies, right? They all generally follow European term of expression, majority of the countries, right? All right. So these were the different types of quotes. You have direct quote, indirect quote, you have American term and European term. Now, when we are talking about foreign exchange and when to exchange foreign exchange, are we also concerned about the concept of when to convert this money? Say, for example, in this example over here, when we took, as on 1/1/2023, $1 is rupees 50. So this $1 rupees 50 $1 is equal to rupees 50 can be considered as spot rate because that is a rate at which you are going to convert your currency into another currency today, right? So that is spot rate. Say for example, I want to find what will be the rate 1 year from now. So that rate is generally known as forward rate, right? Or you may also say it is the future spot rate. So there are two ways of expressing it. First is it is a spot rate. So spot rate today. If I'm already aware of the rates, like when I'm calculating over here, I can say this is spot rate. So this was at the beginning because when I made the original investment. So I'll call this as, say for example, S0, spot rate at the beginning of the period. And here I can express the exchange rate as S1 because this is spot rate at the end of the period, right? However, if I am generally, when you are in, doing transactions in foreign currency, I want to know what is going to be the trend in international market as far as this particular currency is concerned. And I am concerned that possibly I will get lesser amount of currency because my currency will depreciate or appreciate depending on whether my obligation is to pay or to receive. So let me take an example over here. Let me take an example. So first of all, we are discussing right now about spot rate and forward rate. Okay. So now, what is my example? Let's take an example. I have to pay USD, say for example, 100,000 2 months from now, or let me express it as days, because generally these are expressed in days, right? Say I have to pay USD 100,000 to somebody, right? 60 days from now. So can I buy this currency today in a spot market, or should I essentially arrange for this particular currency 60 days from now at a certain forward rate, right? Spot rate is basically nothing but the current rate, while forward rate, generally forward rate is expressed as a rate which is going to be applicable in future, which will be 30 days, 60 days, 90 days, or 180 days quotations are available to you, right? These are the normal quotes which are available to you on regular basis by the banks or the foreign currency dealers. So I have to pay USD 100,000 60 days from now. The question is, should I buy this USD 100,000 today in the spot market, or should I buy this 60 days from now? Now, let's say for example, I know for a fact that 1 USD is equal to rupees 50 today, and I'm expecting that 60 days from now this rate might become 51. Yes, 1 USD is 50 rupees today, and I'm anticipating that 60 days from now 1 USD will be costing rupees 51. Okay, now in this case, should I buy today, or should I essentially buy 60 days from now?
Today.
Today,
Sir,
right? Because it will essentially save me 1 rupee per dollar. Yes? Anybody else having a different answer?
no
सर
sir,
अगर इंटरेस्ट कहीं और मिल रहा है more than ₹1, then we invest in the other option, and after 60 days we withdraw from that money from that option.
Very good, very good. So interest factor is the other aspect which is there, but I was trying not to incorporate any other aspects to it. So let's say that right now we assume that everything else remaining constant, and interest earnings are not going to be, say for example, 1 rupee. This is the only thing which is there in kind of an isolation.
Then
right?
sir, ₹50 only.
Then obviously you will try to save that 1 rupee, right? Because yes,
Right.
any other opportunity, not just interest. Say for example, you have other opportunity to earn in mutual funds or any other investment opportunity available to you. If you are able to earn more over there, then definitely you will invest over there in 2 months, and then you will liquidate and buy the dollar. Okay. But right now, my example is essentially going to be limited to this particular aspect, where everything else remaining constant, you don't have any other investment opportunities, etc. But the only saving which you can do is either you buy today or you buy it tomorrow, right? Now the challenge over here is, if I buy today, as you rightly pointed out, I will essentially end up parking $100,000 worth of money, right? Which is almost 50 lakh rupees. I don't want to park 50 lakh rupees, considering there is going to be, yes, saving of 1 rupee. Definitely, that will be there. But I don't want to essentially fix my capital of 50 lakh rupees 2 months beforehand, right? So in that case, what do? I will essentially buy a contract with my banker. I will fix the rate at a particular prevailing rate, and then I will be completely taking something known as a risk cover, right? That is called hedging. Am I right? So I'll take a forward cover. What is forward cover? I will talk about that as well. But right now what I'm trying to do is, rather than getting into the name of the concept, just imagine that I'm trying to buy an insurance basically for myself. Let me replace this with the word, let's say, insurance. So I'm buying basically an insurance that now, even if in the market, say for example, this rate becomes 52, 53, 54, I will be insulated from it. But having said that, have you essentially invested the entire 50 lakh rupees already beforehand? The answer is no. What I have to pay for this particular insurance is generally premium. Am I right? To buy any insurance, what you pay is premium. So I have to pay for this forward cover, which I am taking. I'll need to pay a premium, and I will be able to essentially book the rates for myself. Right? So here, spot rate, forward rate. What do you mean by spot rate? Spot rate is nothing but the currently available rate in the market, which is 1 USD equal to rupees 50. On the other hand, I have a forward rate, which is a rate expressed in future period, which may be 30, 60, 90, or 180 days down the line. Now remember, this particular position of insurance I was taking because here I am a net payer, right? So let's say I am importer, and that is the reason I have this obligation. But what happens when I am an exporter? Would you recommend the same again to me? Sorry. Yes. Would your counsel remain the same?
के लिए तो 51 रुपीस से मल्टीप्लाई हो जाएगी जो फॉरेन करेंसी आएगी.
Yes. Now you are exporter. So now would you still recommend me getting this particular insurance in this particular case, or would you
No,
say
sir.
convert your dollars into rupees 60 days from now?
Forward date we will convert.
Because that will be giving me 1 rupee more, right? So because of INR depreciation, an exporter obviously gets benefit out of it. So I don't need to go for insurance in that case, considering I'm expecting dollar is going to appreciate, or in other words, INR rupee is going to depreciate, right? So there are two concepts to be learned now over here: depreciation and appreciation of currency. Now remember, this is a zero-sum game basically. If one currency is depreciating, other currency obviously is appreciating. However, the percentage gain or loss is not the same. Why is that so? Let me put it this way. Say for example, INR, so I have the original rate, let's say, over here. Okay, let me say the original rate and ending value rate. Okay, so let's say original rate is 50 rupees per dollar. This is rupees per USD. Okay, and that has become now say 52. Now what I'm expecting you to do is you need to calculate depreciation or appreciation in rupee and USD. चलो बताइए कितना depreciation होगा, कितना appreciation होगा?
Sir, F minus S divided by S.
Okay, so we are talking about in terms of 1 minute. Yes, dear. S
Minus F forward rate.
Okay, so you are talking about 52 minus 50 upon 50. Is that what you're saying, madam?
Yes, sir.
Yes. So this is going to be for depreciation or appreciation?
Depreciation in rupee.
This will be for depreciation. Okay. So I get this to be In percentage terms, this comes as 4%. Am I right? This is the depreciation of INR by 4%. Now, can you tell me what will be the appreciation of currency?
Sir, S minus F divided by S या F, I guess. I'm not confirming that.
Okay. So first and foremost, what you will need to do is you will need to convert this into USD. Then only you can find appreciation, right? Because this will
Yes.
become 1 upon 50 and this will become 1 upon 52. Are you with me?
Yes, sir.
Yes. So I have 1 upon 50 is the original rate, and then that has become 1 upon 52. Am I right?
Yes, sir.
So now when I'm trying to find the appreciation, what will be my formula? Can the same thing work over here? Ending value minus beginning value.
No, sir. Here is beginning value minus ending value.
Very good. Divide by beginning value or ending value?
Divided by ending value.
Ending value. So I have. How come both are coming as 4%? Did I make some mistake over here? Yes. Did I make some mistake over here? What I have done is over here. We have done 0.02 minus 0.019231, right? And we have said divide by 0.019231. This is what we have done. Is this correct or is it wrong?
Sir, either 0.0.
Yes?
I'm a little confused. Students see it starts from 2. So either way, plus or minus, it's from 2. So the denominator should be 2. I'm confused over here. Why is it 0.192?
I'm sorry, but I am not able to hear you. Could you please be a bit more loud?
I'm a little confused as to why do we have 0.192c as the denominator, because we start at 0.02. It's either plus or minus from that. So
Okay.
I'm not able to understand why is that you're dividing it by the ending value rather than the beginning value, because normally change is calculated from the beginning, from point A, rather than where we are. I'm a
Okay.
little confused.
Very good. Okay, okay. Let's put it in that case 0.02.
The spot minus forward upon spot.
Right now, I'm not getting into the formulas, my dear. Try to understand this in a logical way rather than understanding it in a formula way. What should be the logical concept over here? What will be the logical concept over here?
तो यूएस डॉलर में एप्रिसिएशन हुआ है, इसलिए जो स्पॉट का जो यूनिट्स हो गए वो ज्यादा हो गए एज कंपेयर टू फॉरवर्ड, बिकॉज देयर इज अ प्रीमियम. दैट्स व्हाई वी आर मेकिंग दैट इनवर्स कैलकुलेशन. We are taking spot first and then subtracting forward then.
So here, basically, 4% is actually the depreciation, or is it actually the gain? Now, let us try and understand the concept. Okay? Please pay attention. Are you able to see me? When I am essentially moving my hands, are you able to see me?
Yes, sir.
All right. So, going back to the original rate, 1 USD is equal to rupees 50. So that is here 50. Okay. And now that has become 52. Are you with me? 50 has become 52. This is how we talk about appreciation. Am I right? Appreciation is going up. Am I right?
Yes, sir.
Okay. All right. So here, what is the base? 50 or 52?
50.
50 or 52? Yes. This increase is essentially upon the base.
50.
Am I right?
50, sir.
Okay. So here, first and foremost, this is the answer over here. That is appreciation. Because 50 became 52. So what was the increase? 2 upon the base was 50. Are you with me?
Yes, sir.
Very good. Now let's talk about depreciation. Same concept, same concept. Now we are moving in opposite direction. Are you able to see my hand over here?
Yes, sir.
Okay. So depreciation would be going like this or will be going like this, below or above?
Downwards.
Downward, sir.
Downwards. So I'm essentially looking at value going down. Am I right? So what is going to be my base over here? Higher value or the lower value?
Higher.
Higher value. Very good. So here, when I'm looking at depreciating currency, again, I am saying over here, we are comparing. The division has to be with 52 or 50. Are you with me? What is your base? This is your base, right?
Yes,
If
sir.
it is increasing, this is my base. From here, it goes up. So this is my base. Similarly, when it depreciates, this is my base, right? I am depreciating over here. This is my base. So do I take a higher value as a base or lower value as a base?
Higher value as a base.
Higher value as a base, right? Because here you can see 50 to 50, right? For me, it's a depreciation. Am I right?
Yes, sir.
Don't worry, I will simplify it further also.
Amit ji,
Yes.
actually, if the student is not getting the same logic, no problem, because we normally use appreciation or depreciation. Normally, what happens when we use this forex? So of course we use only the spot rate. Like in here in your example, 52 minus 50 divided by 50. So I think you are giving it by the other logic of indirect quote.
Yes, sir.
And that's in indirect quote, the rate may be the denominator may be on the higher side.
Okay, sir.
Okay, so no problem. Is a student, they will be able to grasp later on in later sessions. Okay, no problem.
Okay, sir. Okay.
Okay, so that they could not get the confused so much in depth. Okay.
Okay, sir. No
Because
worries.
our basic idea is just to make them aware about the concept of appreciation. Because if the currency of the US is appreciating, it means our Indian currency is depreciating. So because sometime in some questions, we will share one or two questions later on where both rate we can use. Okay.
Okay.
So right now you can continue with the same.
Okay, okay. So I'll just simplify this even further slightly. There are certain basic.
Okay. So that student could not go into the nitty-gritties of too much in the formula, too much nitty-gritty.
Exactly. See, the idea, sir, over here is that they need not get into the confusion of S1 minus S0 upon F2, etc.
No,
As
I got
long as
your
they
point,
understand
sir.
concept.
Okay, sir. Actually,
Right.
sir, student may get confused with this 52 and 50. Only the my concern is there.
Acha. No, I'll explain it further, so it will become even more easier for you.
Sir. Okay.
So, first of all, always remember percentage appreciation by default is always bound to be higher than percentage depreciation. This is basically a rule. So, say for example, if you are looking at where the depreciation is higher than appreciation, then you know your answer is going wrong. Okay. Now, simple speaking, say for example, my currency has appreciated by 5%. So 100, if 100 is my base value, it has increased by 5%. So what is the new value now? 105. Is everyone with me? Yes? Yes, the currency has depreciated by 5%. The currency has depreciated by 5%. That means 100 has become 95. Are you with me?
Yes, sir.
Right? So whenever I am going to calculate, essentially, if I'm talking about appreciation, I'm always calculating 5 on 100. Are you with me?
Yes.
I repeat once again. Say, for example, same 5% appreciation. How do you essentially think about it, right? So 5% appreciation basically means if original value was 100, that became now 105. Are you with me?
Yes, sir.
So when I'm calculating appreciation, say for example, now percentage is not given to you. Percentage is not given to you. You are given 100 and 105. Then how will you calculate that appreciation? 105 minus 100 upon 100. Am I right?
Yes, sir.
Yes or no? So this is nothing but 105 minus 100 upon 100. Now let's talk about 5% depreciation. 5% depreciation. What does that mean? It was 100. 100 became what? 95. Yes, are you with me?
Yes, sir.
So now I have to calculate this particular value. Now first of all, it is depreciation, so value to negative आना चाहिए. 95 minus 100. Again same thing, na? Ending value minus opening value. Negative आएगा ना आंसर numerator में.
Yes, sir.
My numerator will be negative because I am saying 95. Ending value is 95 minus opening value is 100 upon. Now the question arises, what will be the denominator? Now you tell me denominator will be 100 or 95? It will be 95 when I have to calculate for the depreciation. Right? So whenever we are talking about depreciation, we basically just, it's 100 rupees, same 100 rupees. If I talk about 5% depreciation, I'm talking about calculating on 95. Now, let me relate these two concepts together so that it becomes a lot easier for you to relate to, right? On the same example. So my value is 100. If it becomes 105, right? On the same example. Now, tell me, what is the appreciation over here? Appreciation is 5 upon, how did I get 5?
105 minus 100.
Divided by 100. So I get 5%. Am I right? Now, the other currency has obviously depreciated. So how will you calculate for them? Equal to, again, now it is depreciation.
105.
So your value was 100, now it has become 105. In the numerator, you need negative, right? Your value has gone down. Do you agree with me? Yes. And in the denominator, now I am essentially going to ask, what is the value for me over here? Do I need to take over here 105 or 100?
105.
My currency has essentially depreciated, right? So value over here will be 105 for me. So you can see over here, my percentage is coming as the lower value. Is the depreciation percentage lower than my appreciation value? Getting this?
Yes, sir.
Right? So generally, if you look at difficult numbers, for example, when we look at different numbers, majority of the time students get confused for the simple reason because they essentially are taking very difficult numbers, right? I mean, the numbers are so jumbled up, you essentially get confused. But when you have simple concept, 5% is the change. So when you're looking at appreciation, you're talking essentially in terms of 100 became 105, right? When you're talking in terms of depreciation, you essentially are talking in terms of 5 upon, because 5% has reduced, so I need to essentially have the base, which is going to be the lower one, right? So we are talking about essentially 5 upon 105. Now, as your base reduces, depreciation obviously will reduce as a percentage. Are you with me? Yes. So here, while your base is 100, in case of depreciation, same concept. Now you essentially use your S1 minus S0, etc. concepts. It will also work the same way. But if I hope this has helped you, if not, then you can still fall back onto your formulas, right? But you don't need to do the rote learning in that case if you understand this concept. That's the idea. Sir, shall we take a break right now for 10 minutes, guys? Shall we take a break for 10 minutes, everyone? Shall we start a break or shall we start in 5 minutes? Hello.
Yes.
Shall we start the break right now? Okay, okay, sir. All right, let's take a break of 10 minutes, please. So we were discussing about spot rate and forward rate and how to compute the percentage change or appreciation or depreciation in currency. Now, while we were doing this particular method, which I was trying to explain to you as a thumb rule, for example, most of us were talking about a formula. So here, in this particular example, we have to calculate appreciation and depreciation again. We will use both now, the formula which is there in the module. At the same time, we will also talk about the thumb rule that I had explained, right? So appreciation of USD, or rather I should say percentage appreciation of USD, right? And percentage depreciation of INR. All right. So now, in this example, on 1st Jan 2022, the rate was rupees 80 per USD. On 1st Jan 2023, the rate is rupees 86 per USD. You are required to calculate percentage appreciation of USD and percentage depreciation of INR. So, how do we calculate percentage change in the currency? So first and foremost, how do I calculate percentage appreciation of USD? Yes. Now here, appreciation in USD. So how do I go about computing it? Yes, anybody? It's going to be equal to 86 minus 80 upon 80. Am I right?
Yes, sir.
So that comes to 0.075 or 7.5%. Right? So when I'm expressing this in formula terms, what is the formula which I have written over here? The formula is S1 minus S0 upon S0. Am I right? This is the formula that we have used.
Yes, sir.
Right? Okay. Now, I want to calculate percentage depreciation of INR. So, as I was mentioning earlier also, depreciation is, this is the value from which I am going down.
Yes.
Right? So, my base is going to be the higher value. So, I am essentially going to go from 80 minus 86
divided by 86.
Divided by 86.
86.
Right?
86.97.
Right. Let me put this over here. C, V. So here, you can see over here, what I am getting is 6.98%. Negative because it is depreciation, right? So it is not a negative depreciation, it's at the negative height, it's depreciation. All right. So here, how do I essentially go about it? I have started with S0 minus S1 upon S1. This is the formula that is there in our module. Right? Yes, everyone? Okay. All right. Now, what was I essentially talking about as a concept? So, concept is here, it is 80. 80 has become 86. So, when I'm calculating appreciation, remember, this is increase, right? So, I am going to say essentially 86 minus 80, that is the difference we are talking about, upon my base is going to be this value, right? 80. Now, when I'm talking about depreciation, I am essentially talking about here, there is my current value, my new value is a depreciated value, right? So this is supposed to be my base. Now between these two values, 80 is higher or 86 is higher? 86 is higher, right? So that is the reason here in the denominator we take 86 because that is my higher value, right? This is the way it is going here down, right? It becomes
Yes.
easier for you to remember. Now say for example, let's take a slight variation out of this. So say for example, I have given you percentage appreciation of USD. This is given to you in the question, percentage appreciation of USD, and you are supposed to compute percentage depreciation of INR from percentage appreciation of USD. How will you do that? You have to calculate percentage depreciation of INR. You are not given the values of 80, 86, etc. You are not given. You are directly given in the question. So this is not available to you. Say for example, okay, this is not available to you. This information is not given to you. So what is the information given in the question? You are told percentage appreciation in of USD. Percentage appreciation of USD is 7.50%. Now compute percentage depreciation of INR. So how do I compute this? Yes? Can anybody help me out? So first of all, percentage change is 7.5. So that will be in the numerator. That is a change. Do you agree with me? I repeat once again. I have to calculate percentage depreciation of INR from percentage depreciation of USD. In other words, if USD was, say, for example, 100 earlier, now it has become 107.5, right? So when I'm calculating percentage depreciation of INR from percentage appreciation of USD, you know for a fact the change is essentially 7.5. So that comes in the numerator, and in the denominator, I need to write the new value. What is the new value now? 107.5. Are you with me?
Yes, sir.
Are we still getting the same answer? Check kar lo. Let's check it. Are you getting the same? Yes?
Yes, sir.
Okay. Now, similarly, let's say you have to compute percentage appreciation from percentage depreciation. So how will you do that? You have to calculate percentage appreciation of USD from percentage depreciation. How will you do that? You know the numerator has to be how much? Change is how much? 6.977. Are you with me? Change is 6.977. So that will be in the numerator upon. Now, since this is depreciation, so what will be the new value? 100 plus 6.977 or 100 minus 6.977?
Minus 6.97.
Minus 6.977, right? So it will be 100 minus 6.977 because it is depreciation. So I'll get 7.5%. Are you all getting it? Yes?
Yes, sir.
All right. Right? All right. Now, let's take one example where you have to solve it. I will be doing it with a 1 minute time delay. Okay, so that provides you 1 minute, and I think at this particular level, 1 minute should be more than enough for you guys to essentially solve it, right? Example. So my spot rate is CHF 1.5560 per euro. 0.60. Okay. Now you have to calculate. See, we calculate appreciation of which currency is appreciated, by the way? Which currency is appreciated? So it is CHF upon euro. So euro is the base currency. So for 1 euro earlier you were getting 1.55. Now you are going to get lesser of CHF, right? So the currency which has appreciated is CHF, and the currency which has depreciated is euro. Am I right? Yes. Let's try and calculate now. What will be the percentage appreciation of CHF? This is difference. This is, you can see, reverse of earlier. Earlier you had the base currency which was appreciating, right? Earlier your USD was appreciating, your base currency was appreciating. Here, what is your base currency? Euro. Your pricing currency is what? CHF. I repeat, base currency is euro, pricing currency is CHF. And the currency which is appreciating over here is your pricing currency. So what is percentage change? Yes. $1.55 has become 1.5060, right? So here I'm essentially going to say it is going to be 1.5560 minus 1.5060.
Sir, appreciation is 3.32%.
Okay, very good. And
depreciation is 3.2%.
so appreciation is, are you getting the same answer? 3.213%? Yes. Are you getting this answer?
Sir, actually I'm getting this in depreciation. I think I got.
Okay. Depreciation. How will you calculate depreciation? Depreciation is going over here, right? So first of all, I'll need to find the change. So what is the depreciation? I will need to take the new value, right? Sorry. 1.5060. Sorry. Yeah. Minus 1.5560 divided by 1. Yes.
Sir, in appreciation, should we take in denominator 1.5060 now? As it is the base?
I'm sorry?
As per your hand movements, if we take in the okay, sir, spot rate is higher. Okay.
Percentage change in euro. एक मिनट यहाँ पे. So what is going to be my formula over here? It is going to be S1 minus
S0.
S0 upon which value? S0. Am I right?
S0.
So S1 is 1.5060.
3.213 is what depreciation, I guess.
Minus 1.5560 upon. I am essentially going to write over here 1.5560. Am I right? No.
So the appreciation should be wrong, might be wrong. The 1.5060 divided by 1.5060.
S0
S1
minus S1 upon
and
S.
divide by S1.
So we have got over here 1.5560 minus S1 upon, okay, upon S1 is 1.5060. Yes.
Yes, sir.
Control C, Control V. So let's see, does that also again hold according to our principle? Let's look at it this way. The Hen principle which we are using. So which is the currency which is appreciating? CHF is appreciating, right? So it is earlier 1.5560, right? So it was increasing. So here it is increasing. So the higher value is 1.5060, lower value is 1.5560. Am I right? So that becomes the base. Similarly, for depreciation, percentage depreciation of euro, I have the value which is 1.5560 going down to 1.5060. Now, again, let us compute one from the another. Can we do that? Compute percentage depreciation from?
Sir,
Beta.
do we have to consider, we have to remember that which currency is the stronger in the real sense, और then यानी हमें कैसे पता चलेगा कि अभी तो यहाँ पे यूरो का अभी आपने बताया कि यूरो इज स्ट्रॉन्गर सॉरी CHF is appreciating.
Okay. Acha, let us look at it this way. You are given this information. Okay. You are given this information as your spot rate is, original rate is 1.5560.
Yes.
And now it has become 1.5060. Okay. So tell me, CHF has appreciated or depreciated?
Sir,
think of euro as some potato. Potato was earlier costing you 1.55 CHF. Now it is costing you 1.50. So has potato become expensive or cheaper?
Potato becomes cheaper.
Potato has become cheaper. Potato kya hai? Base currency.
Euro.
Your potato is a base currency. So that is
Yes,
cheaper.
sir.
If that is cheaper, that means CHF has become?
CHF become
Has it depreciated or has it appreciated?
Appreciated.
It is appreciated, right? It will get more for the same amount.
Yes,
So,
yes.
if you convert this particular, your base currency, you can always convert your base currency into, say, for example, a commodity. It will make it a lot easier for you to remember.
Okay, sir.
Right? Because now your base currency has become cheaper. Now, if the otherwise, say, for example, over here, when we were talking about 80 became 86. Right? So USD, say, for example, again the same thing. USD is not USD, but it is potato. So potato earlier was costing 80 rupees. Now it has become 86 rupees. So has the potato actually become expensive or cheaper?
Expensive, sir.
It has become expensive. So what has become expensive? potato, that is USD over here. USD has become expensive, right?
Sir, if
Yeah.
these have been given in reverse form, then
In reverse form meaning what?
indirect form.
Okay, so let us take an example like that. Okay, let me take an example like that. So instead of Control C, let me write it over here. So let us take the rates as this is USD, let's say 0.025 per rupee. Okay.
Yes, sir.
Because generally your examination guys, they like this kind of number so that it will just basically challenge your basic understanding. Because sometimes numbers can be a bit more difficult, right?
Actually, in books, na, the slash price is given. That's why I got confused somewhat.
Okay. So now you have the new rates available to you, which is quoted not in direct, but indirect quote is available to you. Now please calculate. Tell me over here, first of all, which currency is appreciating?
USD, sir.
So your rupee earlier, your rupee is the potato, right?
Yes,
Base
sir.
currency is the potato. So potato is there. You were earlier paying 0.025. Now you have to pay lesser.
Yes,
So
sir.
potato has become cheaper or expensive?
Become cheaper.
Potato has become cheaper. That means the other currency has become expensive. Meaning USD has appreciated, rupee has depreciated.
Okay, sir.
Right?
Yes, sir.
All right. So now let's calculate the percentage. How much will be the percentage of USD, percentage appreciation of USD?
0.025, sorry, 0.025 minus 0.02 divided by
0.25
0.020
2
divided by 0.020.
divided by 0.020. Is this correct? Is this correct?
Sir, appreciating, na? And 0.02 is base, na?
Okay. So your
Sorry.
INR is depreciating.
Yeah.
INR will depreciate by how much? 0.02
So spot rate
minus
is
0.25 divided by
0.025.
So this is divided by what?
0.025.
0.25. Okay. Now pay attention again.
Yes, sir.
Remember the fundamental concept over here. Fundamental concept is always bound to be that your percentage appreciation has to be higher than your percentage depreciation. So is that holding true?
Yes, sir.
Is that holding true? Is the percentage of this is C 0.25, right?
Yes, sir.
So I can convert this. Let me convert this into percentage terms. So you have 25% and 20%. So you can see 25% is higher than 20%.
Yes,
So
sir.
fundamental rule stands. Now again, convert this into, always think of rupee as a, let's say for example, base currency. Always convert base currency into potato, which is easy for you to remember.
Yes,
Right?
sir.
Earlier it was costing you 0.025, now it is 0.020. So whatever is the change, right? That 5 cents, etc., whatever change is there, 5 cents has to be divided by what? By the original price, am I right?
Yes, sir.
So that is what we did over here, and we found the percentage change in the base currency. Once that is there, you know for a fact, if you know percentage appreciation of one of the currency, appreciation or depreciation, you automatically know what cannot be the answer for the other one. Why is that so? Say for example, if I say percentage of depreciation is 20%, I found that over here. Now I don't know how to calculate percentage appreciation of USD to start with. Okay. Then in that case, at least I know for a fact the answer cannot be 20% or less than 20%. It has to be more than 20%.
Yes, sir.
Because percentage appreciation in a currency has to always be higher than percentage depreciation in another currency.
Yes, sir.
Getting it? Similarly, if you have calculated already percentage appreciation of USD, then you know for a fact that percentage depreciation of INR has to be less than 25%. It can't be 25% or above it. If
Yes,
you're
sir.
getting an answer which is higher than that, that is definitely wrong.
Yes, sir. Clear, sir.
Getting it? Okay. And when you have one of the appreciation or depreciation available to you, from that you can calculate the other one. So let us complete that particular element over here, and then we can go to the next concept. We'll start solving a couple of assignment problems in that case. So let us calculate, chalo. Calculate percentage appreciation of USD from percentage appreciation of depreciation of INR. Control C, Control V. Yes, calculate percentage appreciation of USD from percentage appreciation, depreciation of INR. So you don't know 25%, okay? This is not available to you. Then you are only given information about this. Say for example, your example now. What is your example? You are told percentage depreciation of INR, Control C. This is given to you. Percentage depreciation of INR is 20%. Now from this you have to calculate percentage appreciation of USD. So how
Sir,
do I calculate
20
that?
divided by 80.
So 20 divided by,
By 80.
yes, 100 minus. Remember, if it is
100
depreciation,
minus
this is
20.
minus. Right?
Yes, yes,
So
sir.
you have to say 100 minus 20.
Plus 20.
Okay.
Yes, sir.
What you get? Convert this into percentage. You get 25%. Right?
Yes, sir.
Got it? Same way, can you calculate depreciation from appreciation?
Yes, sir.
Right. So Control C, Control V. चलो calculate करो. Please calculate.
25 divided by 100 plus 25.
Yes. So here my change is 25. You know, percentage change is 25. However, in the denominator you are going to write, because it is appreciation, right? So I have to say it is 100 plus 25. So I'll get the percentage of depreciation as 20%. Okay.
Yes, sir. Clear.
All right.
Thank you, sir.
So now that we have established the percentage change, right, and computation of the spot rate and percentage changes basically, now we go on to the next concept. Now, before I go to the next concept, just want to make sure that we have essentially started with the assignment problem. So I'm going to stop sharing this particular file and I'm going to go to the assignment file. I hope you all have that assignment file. You have already received it. As Ashish sir had already said that he has already shared. So if you could.
Sir, can we say depreciation have a base higher always, right?
Yes, dear. Higher base, see, what will happen is if you're going from appreciation to depreciation, your base will be higher, right? Because it will become 100 plus whatever is the appreciation. Are you with me?
Yes, sir. Yes, sir.
Actually, I can, wait a moment. So, wait. What I'll do is I'll take the questions from assignments over here in Excel file only. Let me take it that way. Just 1 minute, please. All right, let me start again. Or you are in Excel file only. Okay. Now we are going to start with the assignment questions. So first question. So this is a very, very basic question. Yes, if the Indian rupee, are you able to see this, the screen?
Yes, sir.
If the Indian rupee is the home currency and foreign currency is the US dollar, then what is the exchange rate between the Indian rupee and US dollar? Now, let's say for example over here, the current prevailing price is USD 1 equals to INR, say for example 86 rupees. Okay, then what are the two ways of expressing it? Direct quote and indirect quote. Am I right? So what is the direct quote? Is this direct quote or indirect quote?
Direct quote.
This is direct quote. So what will be the indirect quote in that case?
1 divided by 86.
It will be INR 1 is equal to how much USD, right? So I can say essentially it will be 1 divided by 86. So that is coming to 0.011628. So indirect quote is INR 1 is equal to 0.011628 USD. Got it, everyone?
Yes, sir.
Very simple, very basic question. This is something which you already completed, right? Now we go to the question number 2. Question number 2. So, what is my question number 2? If prevailing rate of exchange is 1 USD is equal to rupees 50, then which is the reference currency? How would the exchange rate be expressed as per direct quote and indirect quote respectively, assuming home currency is Indian rupee? Yes. So first of all, what is the reference currency over here?
Rupees.
Tell me.
Rupees, sir.
So when I am saying over here 1 USD is equal to rupees 50, it basically means it is INR upon USD. Am I right? This is INR upon USD, which means reference currency is, yes,
INR.
INR, right? The reference currency is INR. All right. Always remember, numerator is the reference currency or the pricing currency. The denominator is always known as base currency. Yes. Now we are told, second part is, how would the exchange rate be expressed as per direct quote and indirect quote, respectively, assuming home currency is Indian rupee? So, how will the direct quote and indirect quote be there? Yes. Direct quote, as you know, will be USD 1 is equal to rupees 50. And indirect quote is going to be
$0.02.
INR 1 is equal to 0.02 USD. Right? So, simple question to start with. All right. Now we take the third question. Shall we go to the third question?
Yes, sir.
All right. now the third question. The price of a bond just before a year of maturity is $5,000. Its redemption value is 5250 at the end of the said period. Interest is 350 per annum. The dollar appreciates by 2% during the said period. Calculate the rate of return. Now everything is in dollar terms, so here there is no exchange rate conversion, etc. You just have to calculate rate of return. So first of all, what is the price at the beginning?
5,000.
Price at the beginning is 5,000 USD. Price at the end is 5250. Plus you are also getting interest during the period, right? Interest during the period is how much? 350 USD. So how do I get rate of return? Yes, how do I get rate of return now? It will be
250 plus 50 divided by 5,000.
That is 12%.
So it will be
5.
P0. Will it be P0 or P1? P1 minus P0 plus interest upon P0. Am I right?
Yes, sir.
So that will be equal to P1 is 5250 minus 5,000 plus 350 upon P0, which is 5,000.
12%.
That comes to
12%.
12%. Now remember, I am solving over here on Excel file. In the examinations, you will be writing on pen and paper. So you'll have to multiply every time with into 100. So please be mindful of that, okay? Don't forget to write into 100 because it is going to get converted into percentage. Got it, everyone?
Yes, sir.
Yeah. All right. All right. Now, before I go further ahead, we need to introduce the concept of bid and ask. So normally, shall I start? Normally, whenever you go to the banks, they basically offer you, or they are basically quoted with the two rates. So you will generally find if you want to buy, say, for example, USD. You know, for a fact in India, we generally quote it in the direct method, wherein we are essentially saying how many rupees per dollar. So the rate may be given something like, say, for example, 86.55 slash 86.60. What is the meaning of this?
That one is buying rate and one is selling rate.
Yes. So what is the meaning of this? This basically says that if the bank is going to buy, it is going to buy at 86.55. And if you want to buy dollars from me, then I'm going to charge you 86.60, right? So it is nothing but buy or sell rate. So bid is nothing but the rate at which they are willing to sell. Ask is known as offer, or also known as what is the other term for ask? Any ideas? buy, right? Here there is sell, there has to be buy over here. Okay. Hello.
Sir, then we have to consider ourselves as a bank, then only we can go simply enough.
See, as a matter of fact, if you consider yourself as a bank, is it necessary for us to consider ourselves as a bank? And the answer is no. Why? Because whenever I see this particular quotation, I am going to focus on what am I going to get. Bank has quoted you this rate. Okay.
Yes, sir.
So when bank has quoted you this particular rate, which rate am I going to get? When I convert, say for example, I have $5,000. I am the exporter. I have received $5,000, and now I want to sell that particular $5,000 to the bank. What is the rate I am going to get?
86.55.
86.55. If I essentially want to buy from the bank, I am the importer, I want to buy from the bank. What is the rate at which bank is going to sell it to me? So I will get at what rate?
6.60.
86.60. Now you might say basically, sir, why difference of 5 paise? So why is there a difference of 5 paise? Yes? Yes, why is there a difference of 5%? 5 paise?
Commission or premium?
That is the commission, right? The margin for the banker. Right? All right. So now, so far, when we were discussing the spot rate and forward rate, there was one element which I had not discussed over here, right? And that element is basically part of spot rate. So whenever spot rates are essentially quoted to you, spot rates are always quoted as per T plus 2. What do you mean by T plus 2? So say for example, today if the bank is telling you 86.55, right, that you will get 86.55. I go and give them dollars today, $5,000 take. They will not give me 86.55. They'll give me lesser than 86.55. Why is that so? Because spot rates are always mentioned in T plus 2 time, meaning there is a settlement period of 2 days, right? So 2 days later, whatever is the rate that is given to you as a spot rate today. Now, if you want the currency, the money today itself, then I am going to charge you something which is called discounting, right? Interest part. And that is what generally bank charges you. As a result of that, per dollar, they will take off another 1.5 to 2 cents out of your money, right? So you will lose at least another 3 to 4 paise per dollar. I repeat once again. What do you mean by spot rates? And if you want to convert your spot rates today, so if I want to buy the currency or sell the currency, say for example, I have $5,000 which I want to sell. So when I want to sell $5,000 to you, bank is going to give me 86.55. It is over here. You can see it is $5,000 into 86.55. So I expect to receive this particular amount, whatever is this amount, right? So how much is that coming to? That comes to 4,32,750. I am expecting this amount, but bank does not give me this. Bank is going to say, I am going to basically give you something lesser than 86.55, which is basically the cost of interest for 2 days. Why are they charging me this? Another, say for example, 5 paise. This is just a hypothetical number. Consider this to be the interest cost. Why do they charge me this particular amount? You can see the difference. 430 to 500. Earlier it was 430 to 500. 250 rupees I have lost. Why have they charged me these 250 rupees? Because spot rates are always as per T plus 2. To convert your foreign exchange into another currency, it requires you to have a wait of 2 days. So say for example, I don't want to incur this cost of 250 rupees. Do I have an option for that? Yes, I have an option. I can tell the bank, you take $5,000, give me 86.55, but bank will not give me 86.55 today. They'll give me after 2 days into my bank account. Does that make sense now? Is that understood by everyone?
Yes, sir.
Right? So now, before we go further ahead, let me say, for example, on the conversion part, these are small elements which will be there as a part of the bigger question. So remember, this is not the only aspect which will get asked as a question. Okay, at CA level, you will not have that. But say, for example, I have the rates given to you as JPY, okay, to INR. Let's say the rate is 2.2356. Okay, 2.2356. This is the JPY to INR, and I want to convert rupees 1 million, that is 10 lakhs, into JPY. Okay, Control C, Control V. So, how much JPY will I get? How much Japanese yen? JPY stands for Japanese yen. So, how much Japanese yen will I get? Similarly, second question is convert rupees Japanese yen. Say, for example, this is JPY. Convert into INR. Hello. So tell me, how will I go about doing this? Convert rupees 10 lakhs into JPY. So
We will multiply it by 2.2356.
yes, because it is a base currency, right? You can see INR is the base currency, and I'm converting INR into JPY, so I can easily do conversion by multiplication, right? Multiplied with 2.2356, I get 22,35,600. Are you all with me? Okay. All right. Now I need to do this the other way around. I have 10 lakh Japanese yen and I want to convert that into INR. Then what do I do? Do I multiply or do I divide?
Divide.
So I'm going to divide. Why do I divide over here?
So the quote is given in Japanese yen per rupee term. So and the amount that we have to convert is also in Japanese yen.
Okay, very good. So there is one simple rule which is said that when you're going up, you multiply. When you're going down from the quote, you divide. In other words, INR to JPY, you multiply. Why? Because here you're going up the ladder, right? From denominator, you are going into numerator. So when you are going up, you multiply. When you go down from JPY to INR, then in that case, you will have to divide. This is just a easy way of remembering the same thing. If this helps you, this is generally because in the examination, you have a fraction of a second to make the decision, right? So does this help? I hope this helps. It is a simple shortcut kind of. So whenever you are going up the ladder, it's always multiply. Down the ladder, it will be divide, right? Let me take another example. We take slightly different example with the CHF, because CHF to euro. So CHF to euro, I'm going to say, I want to, let's say, have 1.2865. Okay, now, so now convert, say for example, 1 million CHF into euro. So how much euro will I get? Yes. Tell me. Anybody? Yes. So here I have to convert CHF into euro. So am I going down the ladder or up the ladder? Hello?
Down the ladder, sir.
Down the ladder. So should I multiply or divide?
Divide.
Divide. Does it make sense for all of you? Yes. Now you have to convert 1 million euro into CHF. So I am going up the ladder. So should I multiply or divide?
Multiply.
Multiply. Right? So when you go up the ladder, you multiply. When you go down the ladder, you divide. Okay? Now this is getting too easy. Shall we add one more complication into it? So there is something known as cross rate. Do we know what is cross rate?
Both rate are given.
When
Given
the-
bid and ask, both rate are given in the both the currency.
Sir, when we are trying to enter into a transaction with two currencies and we are not available with the codes giving these terms of those two currencies, we are then sorting to a way when we are investing in one currency and then converting into an indirect code.
Very good.
टू डिफरेंट रेट का यूज करके हम थर्ड करेंसी रेट तक हम कैलकुलेशन कर सकते हैं. This
Yes.
is the process.
Exactly. So the idea is basically in India, our currency gets directly quoted only against 3 to 4 currencies, right? Which are those currencies? We have direct quotation available with USD, Euro, GBP,
and Japanese, I guess.
Yes, JPY. Only 4 currencies, right? So these are the only 4 currencies where you find the direct quotes. Now, say for example, I want to do transaction with Chinese company. So I need to have CNY, which is known as Chinese yuan, also known as Chinese renminbi, right? So how do I find that? How much will be the rate or how much will be the amount I will need to pay for that? So let us take an example. I'm told over here that USD to INR, okay, USD to CNY. So you're told USD to INR is, say for example, today 80 rupees. USD to CNY is, let's say for example, 8. It's around 7, 8. Okay, let's take 8 for a moment. Okay, so what is the INR to CNY? Calculate. How do I do this?
So रुपी से डॉलर खरीदूंगी, then I will sell dollar to have CNY.
Very good. So say for example, I have right now 50 lakh INR. Okay. So 50 lakh INR, I want to convert this into Chinese yuan. So first of all, what I need to do is I'll need to convert this 50 lakh INR into USD. Now, before we start, please ensure that right now the assumption is there is no other transaction cost or nothing else, okay? Because the idea is just to understand the concept of conversion. How do we essentially convert? So right now, all the transaction costs, etc., or the charges, right now, we assume that there is no transaction cost, no charges whatsoever in between. Okay. with that assumption, we go ahead. So I want to find how much is going to be this 50 lakh going to convert into INR, CNY. So how many Chinese yuan can I buy out of 50 lakh? So first of all, I will convert this into USD. So how many USD can I buy out of this? Yes, tell me.
1,500.
50 lakh. Divide by 80 or multiply by 80?
Divide by 80.
Divide by 80. Are you going from rupees to USD? That is, how are you basically converting over here? I am converting into INR to USD or USD to INR?
INR to USD.
INR to USD. Okay. So this 50 lakhs divide by 80. So I get how much? 62,500 USD. Are you with me?
Yes,
Yes,
sir.
sir.
Now I want to convert USD into CNY. So how many CNY will I get?
Divide by 8. 62,500 divided by 8.
Yes?
7,812.5.
Will it be multiplication or division?
Division. So for 1 CNY, we have quote in USD 8. So we will divide it by 8.
Okay. Anybody else having a different answer?
Sir, but CNY is a weaker currency rather than INR. That's why the logic is says 62,500 multiplied by 8.
Okay. So now, first and foremost, you
Submitting.
have to understand, if I was, see, I said earlier also, if you are going up the ladder or down the ladder, right? So here, if I am going to convert, say for example, 100,000 Chinese yuan into USD, then I am going essentially the other way around, right? Like for example, over here, when we were doing, I had CHF, 1 million CHF into euro. So how did I calculate euros over here? Did I divide or did I multiply? I was coming down, yes or no? From CHF to euro. So divide. Here, should I be doing division or multiplication? Same concept is there now over here. USD से CNY आ रहे हैं. So will this principle be applicable over here? And if not, why?
Cross rate में I guess नहीं होगा ये principle applicable because we need INR divided by CNY.
Yes. So if you even take a simple calculation over here, what I want is INR over here. Now, pay attention, please. So you have USD upon INR, and I want over here INR to CNY for rate and for amount. I will come to amount also, and I am talking about the rate. So I want INR in the denominator. Can you tell me any way in which I can have INR in the numerator and CNY in the denominator? Can I do something over here? Multiplication, etc. Yes? What happens?
The reversal of rate INR and USD. Then I get INR in numerator and CNY then denominator.
Sorry. Yes, I'm sorry, you were saying?
Mathematically, equation is INR divided by USD.
INR, okay. So INR divided by USD.
Multiply
Multiply
Divide.
USD divided by CNY.
upon CNY. Am I right?
Yes, sir.
So mathematically speaking, USD will that can cancelled, and I will have INR to CNY easily available. But the
Yes, sir.
rates over here quoted are USD to INR. So how do I convert this USD upon INR into INR upon USD? I will say essentially this is 1 upon 80. Am I right?
Yes, sir.
Into 8. Can I say so?
Yes, sir.
Right? Everyone, are you all with me? Yes. So what I get is the exchange rate to be 0.1, meaning for every one CNY, that will cost me how much INR?
0.1 rupees.
1. No. there is some mistake which I have made. What is the mistake we have made? Because it has to be 10 rupees, right? Minimum. This is not working. How is that so? This 1 upon 80 into 8 upon 1. It should work basically, but how is this not working? Anyways, let me just rework on that. This was something which we did impromptu. I think somewhere we have done error in classification, right?
But the concepts are same now. That's I told you INR divided by USD and USD divided by CNY. Why it was not working?
Yeah, because the mistake that we did was, let me put it this way. So it is basically USD divided by INR, okay, whole divided by USD upon CNY. Am I right? So what does this turn into?
Yes, sir.
Right? Then you will have 80 upon 8. Anyways, all right. So here I will have 62,500 USD, and since
You
base
have to
currency is
multiply by
Chinese yuan, so I am essentially paying 8. Base currency is Chinese yuan, so 1 Chinese yuan is costing you 8 USD. Am I right? Yes or
sir.
no?
Yes,
So
sir.
how many Chinese yuan will be available to you?
Multiply with 8.
Should I multiply with 8 or should I divide by 8? Now don't go by the market. कि भाई market में क्या rate चल रहा है? What is the rate going on in the market? Because you have to stick with the example which is there. This is basically the challenge which happens with most of the students in terms of their anchoring, right? Because you are so, I mean, this is very natural, right? Because you know for a fact that currently, probably 1 CNY would be equal to maybe 8 to 10 INR. So you are already thinking from that perspective that it is going to be 1 to 10 CNY. So CNY has to be multiplied. I'll get more CNY, right? However, here, base currency is CNY. So 1 CNY is giving you 8 USD. Are you with me?
Yes, sir.
So here, in this particular case, it is basically that, right? So I get 7812.5. Say, for example, if we have the same example, we quote it slightly differently. Instead of USD to INR, a minute, what I did wrong was, this was basically INR. Let me put it this way, INR to USD, and I say CNY to USD, making both as a direct quotes, right? Same concept is there, same values are there. Now will the answers be any different? Yes. So INR is 50 lakhs, you are going down, so I have to divide. So 50 lakhs divided by 80, 62,500, and here I will have, again, I am going now up, right? So 62,500 into 8. So I'll get 5 lakh CNY. Now here there was a mistake which I had made. What is the mistake we had done? Yes, what is the mistake we had done? Now, if you have 50 lakh INR, you are going up. So going up is multiplication, right? Because here the way it is expressed is that 1 INR is going to get you 80 USD. So it is 50 lakhs into 80. So you get almost, what is the value? 4 crores. Are you with me? That is 40 crores. And then how much CNI will I get? So I'm going to convert going down. So I'm going to divide. So 40 divided by 8. Are you all with me? So when you are doing cross rate conversion, now this is a
Yes,
very,
sir.
very popular form of example. This is a very, very popular example you will find in your exams. Now you might say, sir, why is this popular? The reason why this is popular is mainly because it basically challenges your anchoring. Majority of us know that USD is stronger compared to INR. USD upon INR is not 80. It will be something like 0.02 or 0.01, right? Are you with me?
Yes, sir.
Because USD is a lot stronger currency. And generally that is where we generally get confused. Students, because they have the anchoring, नहीं कुछ typo error है sir इसमें. There is no typo error over here. Here, basically, the concept is the same. If you are going up the ladder, multiply, going down the ladder, divide. So in examination, you have to accept the constraint as it is provided. Don't try to essentially take your anchoring from your present in the market. Because the idea of the examiner over there is not to really give you the actual data, right? He's actually reversing this particular data only to confuse you. Because he's seeing whether you can understand and interpolate that particular thing or not. And don't get emotional. Whenever this INR term is there, a lot of the students get emotional. Arey sir, INR ka itna rate nahi hai. It's not this rate. Sir, what are you saying? Nahi. Take it as a question. It's a question which has already given you a hypothetical constraint. So you have to go with that particular constraint. Okay? Is that clear to everyone? Right? So whenever you are essentially trying to express one currency into another, you will need to have a conversion. Let us take one more example. Okay, let us take one more example. Now you might have learned capital budgeting, right? So for capital budgeting, let's say I am purchasing a machinery of CNY 500,000 from China. Okay. Compute the amount of INR required to fulfill the payment requirement. Okay, so you have to fulfill your contract. Now you are given the rates. So your rate INR to USD is, now you will find in the examination you will never get the precise rates. In the examples over here I have given 88, etc. Examination will always be something like 84.3564 because that is how the real day market is, right? And CNY upon USD is, say for example, we talk about over here is 8.0236. Yes. So now, how much INR will be required? Let's compute. So you have how many Chinese yuan? 500,000. I convert that into USD. How much will that become? You go up the ladder, multiply. Down the ladder, divide, right? So 5 lakh divided by 8.0236. Okay. Now I have got USD. So convert to INR.
Multiply.
So I am going to do multiplication, very good, into 4.3564. So I get this. Yeah. Okay. Does it make sense now? So I will need 52,56,767 to be able to buy machinery from China, which is worth 5 lakh Chinese yuan or renminbi. Okay. Shall we take one more example? Shall we take one more example? Okay. Let's take one more example. Mr. X from US wants to invest in India for starting a plant in India. Purchases the machinery worth GBP 80,000 from UK and installed it in India on 1st January 2024. The cost of machinery plus cost of transportation and other charges of USD 25,000 is to be capitalized in the Indian entity. Compute the cost of machinery in India. Now,
Amit sir,
yes, sir.
there is a background in background there is a sound.
Okay, just a moment, sir. Has it improved, sir? Is it better now?
Yes sir, ठीक है sir.
Okay. All right. So here, how do we compute the cost of machinery in India? Shall we start? I need the conversion rates. So I am told as on 1st January, the FX rates were as follows. Now, obviously, here we are assuming everything is purchased and bought and everything happening on 1st of January. Okay. So, INR to USD, INR to GBP, and then we are told USD to GBP. So INR to USD is, say for example, 82.50. INR to GBP is 101.25, and USD to GBP is 1.08. Okay. He purchases. I'll add one more thing over here, which was paid from US in USD by him and installed it in India. All right. So now Mr. X from US wants to invest in India for starting a plant in India. He purchases the machinery worth GBP 80,000 from UK, which was paid in USD by him, and installed it in India on 1st January 2024. The cost of machinery plus cost of transportation and other charges of USD 25,000 is to be capitalized in the Indian entity. Compute the cost of machinery in India. Now, as on 1st January, the FX rates were as follows. Now, first and foremost, what is important is that he has purchased machinery worth GBP 80,000 from UK. However, it was paid by him in USD by him, right? So here the conversion will be INR to GBP or USD to GBP. Which conversion rate we will have to use?
USD
Here
to
there are.
GBP.
So first of all, for cost of machinery, the original purchase price, right? So purchase price I have got is GBP 80,000, right? This is GBP. I have to convert first of all into, this is GBP. I'll convert this into USD. USD में कितना आएगा? बताइए मुझे. Are you going up the ladder or down the ladder? Yes. Up the ladder or down the ladder?
Down the ladder.
Up.
From GBP you are converting into USD, right? So you are going up. So you will have to do multiplication, right? So it is 80,000 into 1.08. It will become 86,400. So it becomes 86,400. Now, further you are told there are other charges also, cost of transportation, other charges. So that other charges is how much? 25,000. Right? This 25,000 is GBP or USD? This is USD. Am I right? And other charges of USD 25,000 is to be capitalized in the Indian entity. So how much is the total to be capitalized in India? Total 1,11,400 USD is to be capitalized in India. So in India you will capitalize in what value? INR value of machinery will be how much? Equal to 1,11,400. You have INR to USD rate available.
Multiply.
Are you going up the ladder or down the ladder? Yes, you are going up the ladder, right? From USD to INR. So it will be multiplication. Up the ladder, multiply. Down the ladder, divide. So you will multiply with 82.5. What you get is 91,90,500. This is the value which will get capitalized in the books of Indian entity. कोई शक, कोई सवाल? Yes? Okay. So today, what are the concepts that we have covered today in the whole session today? I'll just recap in 5 minutes and then we will conclude today's session. Then we'll continue in the next session, right? So we started with, we are focusing on Forex, foreign exchange. Remember the topic is Forex, exposure and risk management. So we started with the concept of Forex. Why do we need Forex? So there are different types of transactions which happen, right? Namely, you have borrowing, trade, you essentially have traveling abroad, or you may have FDI coming into India or going out, setting a plant in India or setting a plant by a lot of the Indian entities abroad, right? So you may have different such entities available or transactions which may be happening, and for that there may be exposure. For those exposure, you have hedging which is done to cover the exposure, right? So these are the various types of transactions and valuations which we'll be learning in terms of forex. Now remember, here we are not going to do valuation of business or valuation of anything. We are basically going to convert those values into INR terms or the requisite currency which has been mentioned in the question. That's the objective that we have. Thereafter, we learn the concept of the different type of quotes which are there and how do we go about computing it, right? So when we calculate returns, any person who is investing in a foreign security, you end up having three types of returns. One is stock return, then you have currency appreciation or depreciation, and third aspect is factor on factor return, right? Which could be depreciation or it could be appreciation as the case may be. Okay. Thereafter, we essentially identified what are the different types of quotes which are available. So we discussed about direct quote, indirect quote. So in case of direct quote, you always mention basically in terms of, like for in India, you mention rupees 50 per USD, right? So rather than expressing it as 1 rupee is equal to so and so dollar, we generally consider any other currency other than my home currency as a commodity, right? So what is the price of that particular commodity in my local currency? That is the concept of direct quotation. Indirect quote is how much of 1 unit of my currency will essentially buy me another currency. American term is basically about always expressing that we express USD in the numerator and the other currencies in the denominator. While in the European term, it is always the other way around, that is mentioning the foreign currency in the numerator and USD always being taken as a denominator. Now you will find there is a very similarity over here, right? So we generally always follow direct method, also known as, you can say, European term method. Then we have two different types of rates available. Spot rate, which is your current prevailing rate, which is generally expressed as T plus 2, right? And forward rate, which may be a rate which is given to you at a value in future, which may be 30 days after, 60 days, 90 days, or 180 days. These are the common quotes which are available with the bankers, right? And then we essentially learned about how to do the percentage computation of depreciation and appreciation. And then when we are converting one currency into another currency, going up the ladder is multiply, going down the ladder is divide. Okay. Now, before I conclude, there was one question being asked by Mr. Manish. Mr. Manish, are you still there? Hello, Mr. Manish, are you there?
Yes.
So his question, Mr. Manish had asked was, sir, we did not consider 2% dollar appreciation because there was no other currency which was available, right? Everything was in dollar terms only. So there is no point in incorporating dollar appreciation. Say, for example, had you invested from Indian rupee into dollar, then that dollar appreciation would have essentially probably factored into the computation, right? But when you have the same currency, your original price was dollar, your maturity value was dollar, interest was dollar, so then you don't have to consider the dollar appreciation.
Okay.
Is that clear? Like when I'm in India, even though my currency is depreciating, I don't consider the depreciation at all because everything is in INR terms only for me. Okay? So with that, we come to the conclusion of today's session.
Thank you, sir. Any student have any query? Okay. Okay, student, now we have come to the end of this first session on the topic of foreign exchange exposure and risk management. And CA Amit Bhatia sir has explained the topic in a very lucid and very elaborative manner as well. And very importantly, he has make you clear the basic concept behind appreciation and depreciation in very in-depth manner. Of course, if you could not get the same too much knowledge in the depth, no problem. Because once you will start, we will proceed further. You will understand ultimately what are the logic. Now, so far as the quotation is concerned, is given, like Amit sir has told you, and he is correct that generally in a denominator we are considering the base currency. And I think, Amit sir, in the end, you have told ki whatever the rate we have given, we have to consider that way. Like even the Indian rupee can be expensive than US dollar, I think. I would like to clarify here that, student, please note that if in the examination the quotation has been given to you in this manner and it has been mentioned like that, 82.50, okay, rupee has not been mentioned. So normally this will be the okay, no problem are there. But if it has been written like that, okay, so of course Ambit sir has told you we have to consider that way. But generally in our CA examination, normally we don't consider like that. The reason is that it is quite bit impossible that in for $1 there for 1 rupee there will be $82.50. But what happens? This confusion mainly comes in the mind of a student. I just tell you a very simple example. There is a generally practical problem is there. Like for when we compare euro and USD, okay, USD and euro. So generally, since euro is bit a expensive currency than USD, so its quotation may be written like that. Okay, so no problem is there. But sometime what happens in some books, they say that they consider first currency as a base currency. So in that case, sometimes the doubt arise in the minds of the student that which we should consider as a base currency. So in this case, since you are not supposed to you can say judge that which currency is more expensive, because euro, USD or euro, they are by nearby the currencies. So in that case, you can consider anyway, then it's not an issue. Okay, then Amit sir judgment, Amit sir logic will be applied. But in case of Indian rupee, you have to take care. Okay, because in some or one or two questions, you will find that we have considered euro as a base currency, euro as a you can say we have considered euro as a reference currency or quoting currency type, or USD we have considered as a base currency. There is one student have asked, sir, he wants to, he is asking that, sir, this is Bujnaru Chandrasekhar. Student, you just send me an email at this to me. I will share the link with you, the Zoom link. Okay, but please ensure that whenever you send your query, your request, please mention your name, your registration number, as well as your telephone number. Now I am sharing my telephone number as well as email ID. So, student, if you have any query, you can contact me at this telephone number. This is STD code, or you can send me an email at sfm-final@icai.in. Monica and I think one or two students have sent me in earlier class when I was doing the real option. There was in one question we got confused, like how we have to take if the investment and what are the returns. So there we were applying the formula of risk neutral. Student have sent me the solution of the same. Student, please give me 1 or 2 days more. I am quite busy in some other work, so I will reply on the same in the next 1 or 2 class. Okay, student. With this, we come to the end of this session, and we shall. Amit sir, have you started the assignment?
Yes, sir. We solved 3 questions today.
Okay. So remaining questions shall be same assignment will be continued in the next class.
In the next class, yes, sir.
Okay. Okay, your screen on this. Okay, my video is not visible. No problem, Ashokji. No problem. It's hardly matter. Okay, student. So thanks for your patient listening and making the session interactive. And Amit sir, we thank you for sparing your precious time and enlightening the student on this topic. Thank you very much. Have a nice day.
Thank you very much.
एक मिनट मेरे को इसकी वो लेने दो पिक लेने दो एक मिनट जो आए कमेंट्स